Thank you for joining us, Hervé. Could you please give us a little introduction about yourself?
Thanks for having me, Hilal. So my name is Hervé Tourpe, and I lead the digital advisory unit at the IMF. It's a new service that the IMF has created recently, about 3 years ago, when we realized that the digital questions and the technology are impacting every aspect of the economies now, either as an opportunity or as a risk. So it was very important for the IMF to truly understand the role, the risks, and the way the technologies work in order to provide a real impactful advice to member countries of the IMF.
How do you see technology becoming an essential part of today's government strategies?
Yeah, it's very interesting how technology has accelerated in the past 10 years, hasn't it? If you remember before COVID, the World Economic Forum used that term. They use the term digitalization 4.0 to describe the accelerations of technology and the impact that it had on the economies. It's interesting also that COVID has even accelerated further the digitalization of country by necessity. So in a way, before COVID, if you will, digitalization was an aspiration, was something that countries were trying to achieve. And with COVID, it became a necessity overnight. So we've seen a dramatic acceleration in the adoption of technologies. The digitalizations of countries was often done before the COVID, and even now to a certain extent, in silo, in a segmented manner. Some aspect of the governments would look at digital identity, others would look at the digitalization of money, other part of the government would look at the digital infrastructure. What is clear now is that a holistic approach is necessary to really accelerate the digitalization of countries and the impact on citizens. So we like to think of this digitalization endeavor in four building blocks. We call that the four building blocks of digitalizations. The first one is concerned the digitalization of the government itself and of money. So everything that the government does is being digitalized. At the center of these digitalizations, digital identity has become one of the goals that most governments have now and are now pursuing. And during COVID-19, it became extremely important to have a digital identity because as governments were trying to disperse money to the population in need, it was very difficult for them to distribute this money remotely without having a sort of identity or digital identity of the citizen. So that became one of the most impacted project in most governments. The second aspect of these building blocks is the whole of government approach. So I noticed that in Maldives, for example, they have named a CTO, a chief technology officer at the government level. So this is really impactful. This is really important that helps to, if you will, direct all activities in the same directions and attach that to an overall strategy. That's very powerful. And the last aspect of these building blocks is, of course, the digitalization of money. We're going to talk a little bit more about that in a minute. So that's the first building blocks, but it has to be done in coordination with the second building blocks, which is the promoting digital business and innovations. The government cannot pay for all of the digitalizations, for all of the technologies that will impact the country. In fact, most countries now have a very reduced fiscal space. They cannot really spend money outside of the absolute necessity of their economy. So promoting a space, a digital innovation space, has become extremely important. That means adapting the regulation in a manner that promotes innovation. That means opening data. Maybe we see a lot of effort towards open data, open government data. Open banking is part of this strategy. Innovation hubs, sandboxes, that was already the case before COVID-19. A lot of governments were actually leveraging sandboxes to accelerate innovation in their country, and it has been very successful. And what we call the PPP, the public-private partnership, has also become an essential tool to accelerate innovation. That's the second building block. The third building block, of course, is managing risks. With every step a government takes towards digitalizations comes more risks. And that has to be managed side by side in coordination with other countries, with technology providers. The keyword here is trust. If citizens or users of this technology do not trust the technology that the government is using, they will not use it. It's a waste of time and money. So protecting data, protecting citizens, protecting the systems of the governments themselves against hackers, for example, is becoming an essential activity. And the last building block may actually be the most important one after COVID-19, which is focusing on the hard-to-reach population. Something that has become painfully evident during COVID-19 is what we call the digital divide domestically within countries. Not everybody was equal confronting the crisis because technology is not available the same way across countries. This is of course true in Maldives as well, where islands and atolls may not have the same access to technology, creating a digital divide that is becoming worrisome. So there is a specific role of the government to fight the digital divide and to be inclusive in their digital strategy.
We've been hearing about the term digitization 4.0. Could you tell us a little more about what that is about?
Yeah, so the Digitalization 4.0 that the World Economic Forum coined a few years ago really described quite well what we were saying just a few years ago in terms of acceleration of the adoption of technologies. What surprised us is that we're almost already in the Digitalization 5.0 at this point post-COVID. There are a few forces of changes we have noticed that have significantly accelerated just in the past few years. One is in the domain of business models and the players on the field. That has been transformative. You heard about fintech, but is also govtech, devtech, subtech, regtech, insurtech, climate tech. It seems like every sector of the industry now is being so much impacted by technology that those domains, they're finding a life in themselves. That's the first type of force of change. The second one is, of course, the impact of technology has grown faster than expected in many areas. Of course, let's start with the most basic one, cloud and mobile. That's not really new, but that has accelerated dramatically the adoption of cloud and mobile technology during COVID. One, because cloud, of course, became immediately beneficial to governments and e-commerce, for example. But also artificial intelligence, data analytics, digital money, blockchain, 5G, and now even the low Earth orbit satellites, right? The low Earth orbit satellites, LEO as they call it, that SpaceX, for example, Elon Musk has started to provide all across the globe. It's believed that by 2022, every square inch on Earth would be able to access fast internet. So there's a cost associated to that, but the availability of the fast internet will be there in 2022, thanks to projects such as Starlink, but there's other providers of internet services that are satellite services that are doing the same. That's the second trend. The third trend is, of course, a rapid change of the users' expectations and adoption of technology. That has changed dramatically during COVID. How many people would never have used WebEx or Zoom before COVID? How many people would never have paid with a telephone before COVID? So that has changed extremely fast. And with that came some expectations about what citizens or travelers expect in their day-to-day experience. Mobile first, of course, citizen-centric approach to government services. It's called the appification of governments. Everything provided by governments is expected to become an app in a way. But also data transparency. We see this whole debates coming from Europe about protecting users from data usage, from fintech and big tech. companies. So this is really also changing user expectations. And finally, 24/7 access to any services. And that's kind of new for most governments. Providing 24/7 access to services is not something many governments have done in the past, but it is definitely an expectation by users. On the other side of the coin, risks has increased dramatically at the same pace of digitalizations. But it's interesting how the appetite for taking risk also has changed during COVID-19. Again, governments had no choice but to adopt technology during COVID-19. There was no choice. So with that, they have revisited some of the risks that they were willing to take, especially in context of providing digital cash to citizens or providing aid through mobile payment, for example. It's not something that governments would necessarily have done easily before COVID. What worries us a little bit is the new type of digital risks that have emerged rapidly. And we do see that most governments are either not aware of those risks or not equipped to face those risks. And that is certainly a concern we have at the IMF, and we want to work with governments to understand those risks and to understand how to cope with them. I'm thinking of new type of frauds, for example. Just to illustrate, if you digitalize the way you're collecting taxes, for example, new type of digital fraud can emerge from that. There's also new targets. Small countries have become the target of hackers, Maldives included. Small countries used to think, and they were right, that the hackers would not care much about hacking them. Now the hackers have figured out that the advanced economies are protecting themselves quite well. So it becomes more efficient for them, more lucrative to attack countries that are not so advanced in terms of digital protections.
What are central bank digital currencies, and why do you think a lot of countries, especially other nations, are working on CBDCs? And what do you see as the risks and opportunities of going for CBDCs?
Yes, so definitely central bank digital currencies, or CBDC, has become one of the key discussions in central banks across the world in the past couple of years, but certainly since COVID-19. Central bank digital currencies is really the equivalent of cash, but on digital form. And that's important because we kind of knew the difference between cash, paper, bills, and other form of payments, such as Apple Pay, Google Pay, um, crypto asset. And now there's a new form, and I'll talk about that in a minute, stable coins, such as Libra, which is now called TM. So those are very different. But central bank digital currencies and cash are really the same type of animal. It's the digital version of one, which means it's a central bank liability, like cash. It's regulated by a central bank, just like cash. It's a legal tender, meaning that if a central bank digital currency comes to production, then it is expected to be accepted by merchants across the country. So according to the Bank of International Settlement, over 80 countries have started to pilot or to investigate central bank digital currencies. But the reality is every single day, there seems to be another country that is announcing their at least research on central bank digital currencies. And it's motivated by, I'm thinking, at least five reasons why we're seeing that. One is, in some countries, there has been a disappearance of cash. And of course, COVID-19 has not helped. COVID-19 has forced people to use digital payment and to use less of cash. This can be a concern for central bank because it is cash is a liability and a way to monitor, control certain aspect of their monetary policies. So digital version of cash makes sense in that context. The second motivation is, of course, a couple of years ago when Facebook and others have announced their own form of digital money. In the case of Facebook, it's called Libra. It's now called DM. And central banks are seeing that as possibly an opportunity for population, but possibly a risk as well in terms of monetary policy, for example. So that certainly has motivated a lot of research in central bank digital currencies. The third reason is CBDC, as opposed to cash, of course, has some attractive features. For example, programmability. Now, central banks are playing a little bit, experimenting with this new concept of programmable money to see what possibility that unlocks in terms of opportunity for citizens, for example, in terms of better control of their monetary policies. A lot of work still has to be done there, but at least it's a feature that did not exist before that intrigues them. The fourth motivation is the possibility to lower the cost of cash. Cash costs money to create, to manage, to replace, to clean, as you know, especially in context of COVID-19 again. Could CBDC lower the cost of cash management? That's a possibility. And the last reasons, not in every country, but in many countries, including island nations, is financial inclusions. So we do see that in some countries, some banks, some commercial banks, some corresponding banking systems are not really working well anymore. So some governments are stepping in with CBDCs to test whether such a new tool could improve financial inclusion.
You mentioned that a lot of island nations are focusing their research on CBDCs. Why do you think, especially island nations, are showing so much interest in
Yeah,
CBDCs?
that's a good question. It is intriguing a little bit, isn't it, that the most active central banks in terms of CBDCs are coming from um, island nations, such as Caribbean islands, for example. In fact, as of today, the only live central bank digital currency is from Bahamas. It's called the Sand Dollar. It's live. It's being used by citizens. Even before China, before other big countries, they issued their CBDCs. And a great number of those islands today are actually piloting, and some are almost ready to go live with this CBDC. So why is that? I think it's quite intriguing, the relation between blockchain, which is a distributed ledger technology, and the concept of distributed nations in a way, right? Those islands have distributed islands. I think that it's not an accident that the resilience attached to the technology is related to the expected resilience of a distributed country. By that, I mean those countries are exposed, of course, are prone to hurricanes and to climate change impact. Um, the distributed ledger technology has been designed to cope with that sort of impact, meaning some of the nodes, some of the elements of the technology can go down, but the technology continues to work just fine. And I think there's some expectation that that could apply to the way technology is being used into some countries. That's one aspect that motivated some of those countries, but there are other reasons as well, where cash has become quite expensive to manage in those countries, right? When you have actually to bring cash by boat, for example, from one island to the next, number one. Number two, corresponding banking is not working so well anymore in those countries. One reason being what we call de-risking, where the regulations for anti-money laundering, countering the financing of terrorism has increased the cost of running businesses in those countries. In the result of that is that some banks are just disappearing from those islands. So population don't even have access to ATM machines in many cases, or to a bank. So that's another motivations for the digital money in those countries, to lower the cost of moving cash. Um, and finally, in many of those countries, the technology that was used there was pretty much a legacy technology. There is not much need to integrate a new technology such as blockchain to the legacy systems. In those situations, we see an opportunity, or those countries see an opportunity to leapfrog with new technologies, to start from a blank sheet of paper, so to speak. So those are the reasons why those countries were the first and are the most active in delivering these technologies.
So, what are the risks and opportunities of implementing CBDC?
So it's interesting that central banks are taking a very cautious approach to designing their central bank digital currencies, mostly because there are risks that have to be addressed before issuing a CBDC. And the risk we hear most often that concerns them that they want to address are, for example, the risk of bank disintermediations, right? If the central bank is to provide a CBDC, would that compete with commercial banks' services and money, for example? So this some design considerations and governance questions are being investigated to that regard. That's one. The other one is, of course, the cyber risks and the operational and reputation risks associated to having your money being shut down, for example, either by a cyber attack or by outages, as simple as that. Obviously, that cannot happen with cash, and that can certainly happen with a CBDC. So that's a risk that is taken very seriously. Another one, of course, is the risk of anti-money laundering and countering financing of terrorism. It's called AML CFT risks. That's also true, by the way, with the same concern applies to crypto money and stable coins, any digital form of money. There is a concern that that could facilitate international AML CFT uh, issues or money laundering risks. The third risk that is to be accounted for is the issue of privacy, integrity, and anonymity in some cases of the usage of money. So this is where there are a lot of discussion, isn't it? Where for cash, if you go to pay for cash for a coffee or something, neither the merchant or the state or the central bank would ever know that you have used that much money for that product. Is it still true if you pay with digital money? Well, that's an interesting question because can the technology be designed in such a way that this transaction would be anonymous? The answer is yes, kind of. We do know, however, that even Bitcoin is only pseudo-anonymous, so to speak, because Bitcoin and the digital ledger has your wallet ID, your public key associated to these particular transactions. Now, if you can link that public key to a person, then you have a linkage between that person and that transaction. So even Bitcoin is not entirely anonymous. So can we really design a technology that is entirely anonymous? Can citizens trust that governments will use that data properly? Those are open questions. The IMF doesn't have an answer to this, but certainly sees this as an activity that has to be conducted and addressed. The fourth risk is, or the fourth question that central banks are asking is the issue of what we call the run risks. You know, in case of an economic crisis, we've seen in some past crises that the citizen would run to the bank and draw some cash from the ATMs, right? And the governments, the central banks, sometimes they limit the number of cash that you can draw from the ATM machines to avoid this run issue. Would that risk be increased with digital form of money? I mean, if you think about it, you don't have to go to the bank to take out your cash. In fact, you can do that literally in 1 second. You can take away all the cash you may have at the central bank, all the digital cash you may have at the central bank. So what is the risks of the run risk associated to digital currencies? So point question that has to be addressed in the design itself. So those are the examples of risks. We think that moving forward, as central bank experiments with programmable money, with cross-border payment issue, new risk will emerge. So the digital risk associated to CBDC has to remain a central preoccupations for the central bank digital currency designs.
In terms of the maturity of the technology, what do you think are the main limitations for CBDC?
So the investigation of central bank digital currency and the role of blockchain in particular, or distributed ledger technology has started a few years ago. And already a few of those earlier challenges have been relatively addressed and a few more remains. The one we're seeing as being less of a concern than it used to be include the very concept of the tokenization of money, the ability for the technology to represent cash into a token version, a digital token version. That has now been proven by many projects. Obviously, it started with Bitcoin and Ethereum that have tokenized the concept of value already. And we know that it's now possible with traditional cash. That's one aspect. The other one that seems to be less of a concern because many projects manage to do that properly is what we call the wholesale transaction, meaning the big transaction done behind the scene between central banks, for example. That too can be done using blockchains, and many papers have shown, and many studies have shown that that became very much possible. The programmability of certain rules is also something that banks have now, central banks are quite comfortable with. For example, to limit the transactions one can do while being anonymous, and over a certain threshold, you may need to identify yourself before spending more than, I don't know, $1,000, for example. But below that threshold, through an algorithm, through the programmable smart contracts, you may be able to spend that money anonymously. Central banks have experimented with that. It's now not much of a concern. Surprisingly, scalability is not as much of a concern that it used to be. We now know that one doesn't have to use the Bitcoin blockchain, what's called the proof of work, that is relatively slow, that consumes a lot of electricity. Other forms of blockchain have since emerged. Private versions, it's called permissioned versions of blockchains, where central bank have a certain control over. They can even control how much electricity, how much validators and nodes are needed to run this digital form of money. So scalability can be addressed by many ways, and central banks have less of concern now with this particular aspect. And the last thing is exchanging money across border, for example. We require some standards. So we agree, for example, of what is payment? How do we represent payment? A certain number of protocols are emerging. One of them actually is already being used. It's called the ISO 222. So it's a very popular standard that countries are adopting. So those are the questions that are not so much of a concern anymore, but there are still some that remain a challenge. And to this day, nobody has a good answer to some of those issues. For example, how do we agree on the representation of a CBDC? What standards do we use across countries, across central banks, to agree on the representation of a token? In technology, we use the concept of technology stacks as well. Can we agree on some sort of common model that would facilitate cross-border payment? I mentioned before the concept of privacy, anonymity, and confidentiality, and the role of technology to address those is not an easy one. There is a policy question associated to anonymity and privacy, but it's a technology questions, and it's not a given that the technology can do everything that the policy wants it to do. And the last one I would say that is still a challenge is the offline access to CBDC. Of course, cash doesn't have an issue being accessed offline by definition, but especially in island nations that are subject to outages because of hurricanes and because of climate change impact, they're going to have to address this issue of offline access to cash, at least for a certain duration, say a few hours, a few days. Some transactions can be done offline safely. That remains a challenge today.
With the rapid adoption of technologies like blockchain in finance and other sectors, how do you see this technology evolving?
It was a bit worrisome until 2020 and 2019 that there were a lot of pilot projects, a lot of proof of concept, and not so many going live in production. That has significantly changed to the point that blockchain is now considered by technologists as a mainstream technology that can be used in many use cases. Of course, in the world of finance, we've seen a lot of adoptions. I mentioned the wholesale payment on transactions, CBDC being live now in Bahamas using this technology, and this whole development in the world of decentralized finance, or so-called DeFi, that I can address as well. But interestingly, blockchain has become a reality also now outside of the world of finance. For example, in the health industry, thinking of the UK tracking chemotherapy drugs and COVID vaccination distribution using blockchain, or the food industry. IBM has a very popular blockchain, it's called IBM Food Trust, that enable Walmart and other big corporations to track where food has been collected, transacted, distributed. Coffee bean industry is also using blockchain now to track the trail of coffee beans and the production of coffee beans. Insurance is using blockchain in many use cases now for compliance tracking. There's also the carbon footprint industry, and part of what we call green tech or climate tech is leveraging blockchain in many scenarios today. And it's this whole development of the so-called Web 3.0 as well. So it's quite interesting development that has been fostered by blockchain, where Web 1.0 was the web of information. Web 2.0 was the web of collaborations with Facebook and that sort of tools, or the social web. Web 3.0 is known as the distributed web, where data in particular would be given back to the user. So there's a lot of research being done in that domain, but the intention is around distributed data in a manner that data doesn't belong anymore to Facebook, to Visa, and to other centralized institutions, but to the users. So that's an interesting development, and a lot of interesting projects are being done. And I think most importantly, it's not so much about the evolution and the maturity of blockchain. It's the evolution and maturity of all the other technologies combined together, producing massive value. Thinking of the evolution of Internet of Things, for example, or so-called IoT, made of sensors being used in so many circumstances. In my own household, I probably could count 20, 30 sensors that make my house and my experience with my house smarter. This has really accelerated in the past 5 to 10 years. The adoption of cloud, obviously, has already been part of this digitalization 4.0 revolution. Mobile being at the center of everybody's life. I'm sure that if you reach your hand, you probably, just like me, have a phone next to you. I don't know any person that doesn't have a phone that it can reach with their hand right now. But also the acceleration of artificial intelligence and machine learning has been stunning. There has been a lot of promises in the past 40 years about AI and machine learning, where AI in particular, machine learning is really the new kid in the block here, that has accelerated the use of so-called big data, advanced data analytics, and finally the so-called ubiquitous fast internet through 5G, through satellite internet. This is also becoming a reality quite fast. Now, all of those technologies combined are certain to provide even more value than ever before, and to accelerate innovation for the financial sector, but every other sector of the industry for sure.
So, how do you think these technologies are contributing in closing the gaps in the economy and communities?
Yes, it's clear to me that we have seen only the tip of the iceberg as far as innovations and the impact of those technologies from blockchain, IoT, cloud, AI, ML are concerned. We are at the beginning of it. Just to take one on blockchain and in finance, and observing what has been happening in just the past 2 years in what's called DeFi, or decentralized finance, that seems to constantly reinvent finance almost every month there is a new concept appearing, and some fancy terms as well that just didn't exist before. So DeFi for decentralized finance has been contrasted to CeFi, centralized finance, and now we hear the terms such as CDFi. Believe it or not, it means centralized, decentralized finance. Those are concepts that did not exist even 2 years ago, where DeFi actually is an interesting concept in finance, where you can lock some money and some financial services into smart contracts, usually on Ethereum blockchain, but now we're seeing other blockchains, type of blockchain providing the same type of services, where everything is decentralized. There is no centralized authority, even for exchanging your coins with each other. So normally you would have to go to Coinbase, Binance to centralized, so-called centralized, decentralized financial exchange. You don't have to do that anymore. You can do that on decentralized exchange platforms or DEX platforms, which provide automatic market makers services, AMM services. All of that, those terms did not exist a few years ago and become part of financial services nowadays. All of them decentralized. There are concepts of liquidity pools, liquidity pools providers, yield farming, flash loans. That's an interesting one, where you can actually issue a loan without collateral, without asking for collateral, and ask for reimbursement even before the loan is issued. It's a very interesting concept that is that is leveraging the time to process the loan and the ability to provide some arbitrage across market. And of course, everybody has heard about NFTs, right? Non-fungible token. Had been existing for a long time. Technologists know that as the NFT 721 protocol, but that has been marginal and reserved to gaming and to some fancy coins. Now it becomes part of the financial system in many ways, where you've seen examples of millions of dollars being spent on those unique tokens that people are ready to pay for. But that has become a reality not only in the gaming industry, but in the sports industry, the way you can buy tickets, the way you can be involved into sports events through NFT is changing the way sport events in particular, and we expect other type of domains will be impacted by an NFT. And I do believe that a lot of them will die, will probably show no value or too much risks. Some of them will continue to innovate. Some of them might be of interest for even central banks, right? If indeed there are some valuable innovations from this DeFi domain, there's no reason why a central bank will not try to leverage those tools while managing the risk associated to them. It's quite amazing how fast innovations is evolving in these domains.
Can you let us know your thoughts about the Smart Islands project that we're working on?
So it's interesting that such projects emerge in such a favorable environment, right? Islands in many ways, such as Maldives, seems to be the perfect environment for the private sector, for technologists, and for governments to work together and to leverage innovation. Island nations in particular, and Maldives, for example, has some very interesting pain point. Of course, the impact of climate, the need to be a perfect experience for travelers, the benefits of new technologies, especially for those islands, of distributed technology in particular, and also the attractiveness for the private sector to experiment with these technologies in a safe environment, in an environment that can scale under strict control, such as a small islands, where you can experiment first one main islands or some atolls, very controllable environment. But the other aspect is, of course, the replicability, because many island nations face the exact same issue. And there are good reasons to believe that what works for one island might actually work in other islands. I don't like to say that about technologies in general, but in this particular case, when an ecosystem is designed properly with safety and cybersecurity in that case in mind, with the proper regulations or adapted regulations in the form of a regulatory sandbox or other schemes, for example, with the right partners, partners that are trustable. I'm not talking about working with some small startup that nobody has heard ever before, but talking about serious partners, and working directly with either the citizens or travelers, the population that will be impacted, that will benefit from those environments, that I believe can be replicated. So that calls for probably cooperations across islands and communications across islands so that the ecosystem being developed can account for other needs, maybe from other nations. I do believe that this cooperation across island can be extremely impactful and beneficial for not only the nation itself, but for other island nations.
So thanks so much again for taking the time out of your busy schedule to be part of Island Sessions and share so much about frontier technologies with us.
So thank you very much again for inviting me to this Island Sessions series of video. I do believe that raising awareness and communicating across experts is an extremely important step before adopting those technologies. And we see a lot of talks and panels about the concept of digitalization in general. But here what you're trying to do is really to focus on a specific use case of island nations and helps really get the discussions on both the opportunities and the risks that apply specifically to this use case. The awareness that comes out of it, I do believe will enable a faster adoption of those technologies and higher success of those initiatives. So good luck to you.